The following is a presentation of TFNN. Live at TFNN, The Money Masters.
Let's go to Shivan in Boston. Shivan, what's happening, brother?
I'm watching you both on Tiger TV.
That's a beautiful thing.
Yeah, definitely it is. Learning a lot from Tiger.
Now, your Money Masters, Tom O'Brien and Steve Rhodes.
Welcome, folks. Steve Rhodes, Tom O'Brien. I appreciate all you Tigers and Tigresses growling and prowling out here with us, folks. And, of course, hope everyone had a great weekend, and let's make it a great week. Right now, we get the Dow up 19, Nasdaq's up 8, S&P's flat. We got gold up $2. Copper's flat. Oil's up 14 cents, big deal. Bonds are up 14 ticks. We're going to talk about that. Bonds came down the other Friday.
They did.
Didn't get to the swing point, though, and had lighter volume.
Okay.
Even though it was heavy volume, it was lighter volume than what they're going against.
Yes.
King dollar up 16 ticks. Now, even with the market exploding last week, topside,
yes,
they couldn't kill King dollar. It's pretty wild, actually. I mean, we're at 82.93. We'll get our head wrapped around that. And, of course, you know, you get Draghi, it's going to save the world. You get the euro, it's going to save the world. It's just a beautiful thing. There's no two ways about it.
Saving the world is a beautiful thing.
Yeah. Oh, listen, man. Well, you know, let's start right with the dollar, because we take a look at the dollar. Dollar index, this is, we're talking, folks. What you're going to see is this. You're at 82.92 right now. And what we've done is that, you know, this consolidation has been on since, May 24th.
Yes.
And you certainly came down with some juice. I mean, it was 34,000 contracts, but guess what? You're coming into 42,000 contracts.
Yeah.
So, you know, we'll see how it plans on attacking the high of this whole deal again. It didn't even get to the swing point.
Right.
You know, just the largest swing point is 81.39, but, you know, you get a little swing there at 81.50. So if we go over to the bonds, we take a look at that bond, what we did with the 30-year. She came down, and she came down hard. No two ways about that. She came down, and she did 533,000 contracts, but guess what? You're going to 792.
Right.
So, and that, you know, when you look at that chart, that didn't get to the swing point either. If they don't get to the swing point, they don't talk, walk, and squawk.
Yeah, and right now you got the DAX. It's just sitting underneath its swing point. So if you go over to you know, around the world, because you take a look at the DAX being able to provide us with some information this morning, its swing point here is July 20th. That high is 67.75 and 74 cents. It's only gotten up to 67.71.
Right.
So I don't have the volume on it, so I don't know what we're looking at here, but you know, it's parked right underneath it right now.
Yeah, and what
probably
we did
park there today.
So watch. I have it from Friday. So this is beautiful. Oh, check this out.
So even on Friday, it was going up on lighter volume.
So this is what it is. Friday we did 147 million, folks. Guess what? Going into 217.
Yeah.
So I won't get the volume on this about 7 hours after the close. But bottom line is that it doesn't mean a thing. And well, actually, you know, you just brought up. We were talking, folks, about. Okay, so you had Draghi out there saying, hey, listen, you know, we're going to save the euro, and meaning that we can print money, we can print euros to buy their own bonds.
Yeah.
And the bottom line is that what was hilarious is that, of course, the dollar pulled back. Fundamentally, folks, if they print euros, the dollar's going to go to the moon.
Exactly. That's what we were talking about. That was my question for Tom this morning was, you know, the fund, you know, you take a look at market reaction,
right, and
then you always have to step back and take a look and say, okay, why? But, you know, got to understand what traders are doing. But, you know, as Tom was pointing out, if you print euros and you do not print U.S. dollars, the euro's going to get weaker, the dollar's going to get stronger. We know what that correlation is directionally in the market. And so everybody's out there serving up that Kool-Aid, but nobody's really talking about the other side of that transaction.
And that's what's really cool here, folks. That's what's so cool about when you have downdrafts in the market and then you have those types of rallies. Because, you know, when you actually look at it, it's okay. It's rallying. Why? Oh, it's rallying because they're going to print money. Oh, really? Okay, and the dollar's going back. So, and the amazing part is that is how markets move, though. You know what I mean? The bounces will come in.
Yeah.
And when you have high volatility, you have to expect it. And we're in a high volatile market right now. There's no two ways about it. And it's going to go both ways, highly volatile, folks. So It's fast fingers.
It is. It is. It is. And trading in a range. Right now the range
absolutely still in a range.
Yeah, right now it's been in an upward price channel range.
Yeah.
Ever since really the June 4th lows that are out there.
Right.
So it's clear across really all of the charts. But you do, folks, you do want to make sure that I had a caller that called in during the last segment, and we just didn't get enough time to finish it off. We were taking a look at Google, but really what he was asking me was, how do you apply fundamental aspects to a chart? My response was the fundamental aspects will play themselves out inside the chart through volume. So you don't have to get too hung up into, the most fundamental piece of information is really what's going on with supply and demand, what's going on with price and volume. I mean, it's really, doesn't matter whether you've got inside, it doesn't matter who's buying or selling.
Right.
It's going to play itself out inside the chart pattern out there. And that's why I say, I do take a look at those fundamental aspects of, now, wait a minute here, you're going to print euros and you're not going to print dollars. It doesn't end well.
Well,
when the correlations are the way they are.
No, absolutely, man. I mean, I heard the call, and if you're going to go into a fundamental deal, what you have to do, I would suggest right off the bat, and I want to pull this up because even when I heard the insider selling, I don't believe there's a lot of insider selling because I've been watching this, but I'm going to find out right now.
Yeah.
What happens is that the reality is that you better understand that you're still looking backwards and you believe in the CEO and you believe in something that's in there. Well, versus just are they buying or selling it?
Yeah.
Period.
Well, and what you've also got to do when you take a look at so no matter what your trading platform is, and you can take a look at insider selling that might be going on. What you also have to do is immediately go to the SEC website and pull up the filing forms, because what you need to understand is, in many cases, some of the selling that you're seeing going on has already been prearranged years before.
Right.
Right. And so if that's the case, I don't take that type of insider selling with the same grain of salt as
that's right.
Okay, where it's really not already prearranged from a time standpoint.
Right.
So you want to make sure that you understand what that fundamental piece of information really is. Don't just believe that first blush what comes out what's reported, because it's always something else.
Yeah, for sure. Let's go to Mike in Lakewood, California. Hey, Mike, what's going on?
Oh, not too much. How you doing?
Doing great, man.
Yeah, I'd like to talk to you and get your opinions and your comments about what you think will happen if the Fed does one of two things. One would be if they stop paying I guess it's 0.25% that they're giving the banks for parking their money. For
the reserve, yeah.
And two would be what would happen if they raise their inflation target, let's say from 2% to 3 or 4%. I have an idea what will happen, but I'd like to know what you guys think.
Well, first off, why do you think they'd ever raise their inflation target?
I think, that's been commented upon by a lot of people across the spectrum. But that's one thing they might do, and I don't have a good feeling for what that would actually do to the markets.
Okay, well, I can tell you flat out, that's not going to happen. In their mandate, their battle all the time is their two mandates, okay? And the inflation one's first, and they can't do that. They literally can't come out and say, okay, now we're going to go 4%. Won't happen, okay? They might happen and say, okay, I want to go 2.25%, but they're not going to go overnight and say 4%. That's their mandate is to keep inflation down. That's the first one. The second one is unemployment. I think the move on the interest, I think they'll probably do it. I'd like to see them do it, because that's one of the bigger problems. They've let the banks make free money for a long time, and the banks are still going to make free money, and that's just, why not? That'll just push money out into the economy, which we need done.
Yeah.
Okay, I tend to agree with both things you just said. If they take the interest rate away from the banks, and do you think the banks will actually start lending, although I don't think there's all that much demand, or will the banks then take the money and stick it in the stock market and try to make money that way and drive the markets up higher?
I would say that the last thing the banks are going to do, my take on it anyway, is move into the equity markets. That whole game, I would say, between Dodd-Frank and they've been breaking that whole thing up. They can get away with a certain amount, but that game's over.
Okay, well, that's why I called. I wanted your opinion. I appreciate it.
Okay, man. Have a great one.
Thanks for calling, Mike. Thanks for calling.
Yeah, it's going to be wild watching this whole thing shake out. I mean, I don't see them doing anything.
Yeah, exactly.
You know,
exactly.
And the reality, folks, my reality down here anyway, the economy's moving, man. You know, it is. I mean, you know, oh, listen to this statistic. Okay, this is as good as this is wild. Okay, you know, we've been talking about that. I've been talking quite a bit of. I've seen 3 huge cycles, folks. Okay, and one of the main reasons that the economy, our economy in general, has accelerated over the last 30, 40 years was the baby boomers.
Yes.
Okay?
Yes.
And, you know, I've talked about that, hey, listen, the 30-year-olds.
Yes.
Okay, now I get the facts, though, okay? Because what has happened is I've been working statistically on, okay, what's going to move the housing market, what's going to move the whole bit, right?
Yes.
So check this out. Google 32 to 13 population, right?
Okay.
You're going to get your mind blown.
Oh, okay, okay.
Guess what? It's bigger than the baby boomers.
Yeah.
Okay? Huh? So, this is what you have happening. The crowd that starts at 32 and goes to 13, if you're that age out there, or even, you know, a little bit older or younger, what you want to do is this. You got to jump ahead. You got to be as close as you can get to that 32 or older than 32.
Yeah.
Because when that tsunami comes, everything, just like what ended up happening in the 60s and the 70s, anything, you can't help but make money if you have a product, because there's so much demand. Just because of demand.
Right.
Just because of demand.
Right.
And it's there. And you know, you can see it. I can see it all over the place around here. I mean, down at Clearwater Beach, the young kids are everywhere. When we went to Las Vegas, I was looking and saying, "You gotta be kidding me!"
Yeah, exactly. I remember.
But it's happening. It's happening right now. And the key on that is understanding that 30 is like the beginning of really starting to make money, okay?
Yeah.
When they get to 35 or 40, they're going to be making a lot more money, and so they're coming into that whole deal.
Sure.
So that was, because I was speculating that, but I got the number either Thursday or Friday I got the number.
Okay.
Isn't that cool?
Yeah.
It's amazing. And folks, it's great for the whole country. That's the bottom line. I mean, that you get a bunch of young people. They're bright people. They're ambitious people. You know, it's there, man.
Yeah,
I mean, and it's really, and you can, understanding that, folks, okay, no matter what community you're in, can position you to really do well in whatever business you're in.
Right.
And pay attention to it, because it's a big number, man.
Yeah.
You know.
So, you know, and what. As you started that conversation, you were talking about, you know, you don't think the Fed is going to do anything.
Right.
Okay. So, you know, folks, all you have to really do, when I've got on Tiger TV, you know, nothing more than just simply the long-term monthly Dow chart. That's the number everybody reports on. The low of the highs from October of 2007, 13,400. We're at 13,100 right now. You know, market-wise, they don't need to do a QE3.
Wow.
We're already at the highs.
Totally. Stay right there, folks. Yeah, exactly.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers, where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kay Stalter, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows. Plus, see all the charts as they happen live during those shows and have access to archives of those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. Steve Rhodes, Tom O'Brien. Appreciate you growling and prowling out here with us. Right now, we get the Dow up 45, NASDAQ up 7, S&Ps are up 4. Some of the high volume stocks, in the market. Let's see what we have here. You got, I see, so Shaw Group got taken over. That's up $15.
Yeah.
And as you said, Chicago Bridge is taking them over, and that's down 5.
Yeah. They didn't like the premium.
No.
They didn't like the premium paid out
Big
there.
premium, man.
Yes.
No doubt about it. You get Facebook. Oh, we'll go over to Facebook in a little bit. Facebook, folks, is an ABC structured down to the $13 area, which is really wild.
Yeah, I heard you on Friday talking about that.
And the amazing part, that you had a monster day on Friday, and Facebook basically was taking out, did take out its B point with volume. We took 123 million versus 61. It's like, it's done.
Well, yeah, and I heard actually caught the you and David were talking about it. Just simply all the shares that are freeing up with inside Facebook.
Wasn't it?
Yeah, so you're talking just major liquidity in Facebook coming into the marketplace.
Totally over the top.
Yeah.
Oh, I mean,
with employees that are seeing, in their mind they thought it was going to be worth X number of dollars. Now it's worth this.
That's right.
And they're just simply, hey. So we take the known. I'll cash out now.
Big time. Particularly, and what they got to see, folks, is that when Zynga went public, the management of Zynga, every one of them cashed out. Big money. Every one of them. Facebook didn't get the same, Zuckerman got the same deal, but the rest of the company really didn't.
Yeah.
So Facebook right now has 633 million shares out there, and I think when David was showing that, I think
it's more than 633 million shares. That's
going to get released by December.
Yeah, exactly. I was listening to the numbers.
Exactly.
Just kind of just like, oh my goodness.
Yeah, no, totally.
Yeah, and with those lockup agreements. Yeah.
Oh, and Groupon's done. I mean, it's amazing. There is no doubt that when they pushed those out,
yes,
that was the peak.
Yeah,
that was the peak of that whole deal.
And just think of just all the hoopla, all the everything.
Oh, was huge,
nonstop, 24 hours a day on the business channels.
Right.
And it's like,
well, what's interesting? There's a guy. I remember this guy really well, Kevin Landis, and he was, with one of the high flyer analysts. In the 90s, right?
Yeah.
That would, bottom line was saying every stock's going to go to 1,000, okay? And, of course, every stock went to $1. And what ended up happening is that he come back as a second life.
Yes.
And his second life is that he's got this fund and he buys these pre-IPOs, right?
Okay.
And I was looking at one of his quotes the other day, and it's like he's so buried. He bought Facebook pre-IPO, even at $30, right?
Yeah.
And his quote was like, "No, this is still going to be good. I'm buying more. I'm saying to myself, man, it never ends, right?"
Yes,
this time, unfortunately, both times were bad, but this time, it's this fund that's going to go south, So it's. But listen, when you listen to that, it's like, you got to be kidding me.
Yeah.
I mean, what is going to make it? Well, particularly, it'd be different if it wasn't valued at still a level that is almost as high. It was 90. Facebook, folks, was valued higher than 98% of the stocks in the S&P 500.
Yeah.
Including Coca-Cola.
Yeah.
I mean, oh, really?
Yeah. No, I know.
Give me a break, man. Let's go to Rich in Orlando. Hey, Rich, what's going on?
Good morning, Tom. How you doing?
Doing great, man. You having a good day out there?
Pretty decent. It's pretty nice here in Orlando.
Oh, yeah, good. The weather we've had this year, folks, is absolutely incredible. I mean, if you want great weather, come down to Florida.
That's for sure. It is toasty, though. That's for sure also. Listen, on this TWM.
Yeah?
I mean, I'm looking at this right here. It looks like it would be an entry-level situation. But I didn't like the volume on Friday as it came down. But, I mean, you've got higher highs and higher bottoms. You've got a high-volume high there in early June, at the 37 and change area?
Yes. Yeah, let's take a look at it. So the TWM, folks, is the pro-share 200% inverse correlation of the Russell 2000. The low on this for the year is 28. The high is 66. So if we just go over, and basically take a look at it, I mean, if you're going to trade this, I would say that, that's not a bad place. And give it nothing, though. Do you know what I mean? Do you know what the daily range in this is, by any chance?
Yeah, I can tell you exactly what it is, yeah.
Because...
TWM?
Yeah,
TWM.
and what you have is this, is that you have... The Russell 2000, folks, has not been even... And this is where the divergence comes in. The last high, swing high, was 808.53, which was on the 19th. Well, that's not even the swing high that the rest of the market went to. That is 820.
Yeah.
And that says quite a bit, man. That's saying that, that is the weakest indice.
Yeah. Average range on that's $1.04 per day over the last 10 days.
So that's all. You put your stop on the other side of $1.04, man. You're cooking.
Thank you very much. Appreciate
man. Have a great one. Have a safe one. Steve Rhodes, Tom O'Brien, all you tigers and tigresses, you stay right there, folks. We'll come right back.
Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to tfnn.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-446108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. Steve Rhodes, Tom O'Brien. Appreciate you growling and prowling out here with us. We have the Dow up about 35, Nasdaq's up 3, S&Ps are up a couple bucks. And how are we doing with that DAX in London? I mean, in Germany. The DAX, folks, is the name of the game. The reason being is that it leads up, it leads down.
Yeah, you're still tucked underneath the swing point.
Still right there.
Yeah.
Okay.
So, another hour to go. And it looks like, especially after the move of the last couple of days,
right,
just simply around the world, big move. And so it's just right now it's a little bit, it's always interesting to hear the tone change on the media channels, First it's, the Kool-Aid that everybody's pushing out there, and nobody's asking the other side of the question, like we were.
Right.
Wait a minute here. Okay, you saved the euro. Does that mean you're going to be printing? And if you are printing, hey, folks, that's going to be a stronger U.S. dollar unless we join in on that game.
Right.
Okay, and there's no reasons for us to join in on that game.
No.
Market reasons, there certainly isn't. And then today they starting to ask the questions, well, where are the details?
Yes.
What are you really going to do?
Which is normal.
You shouldn't have been asking that the first.
Yeah.
But, because we've been down this road so many times for so long.
I know. Today in the Wall Street Journal, folks, too, it's so cool how progressions take place in the marketplace. So, on the second page of Wall Street Journal today, what do you think it has? Strong dollar That's the reason the companies can't make money.
Yeah, well...
And it's so... When they break it down, listen, folks, when they break it down,
yeah,
you wouldn't believe, okay, so the CEOs, and I'm talking about major companies, right?
Yes.
The CEOs are blaming that the move was so quick in 3 months, there's nothing they could do about it. They're absolutely lying, folks, okay? But the number that they do not take in from the strong dollar is extraordinary.
Yes.
I mean... The dollar hasn't even moved yet. Wait till the dollar goes to 89 and pop.
You know, my calculations were it was about an 11% between the 2 quarters, okay? They had about 11% that they had to make up for.
Okay.
You know, on their overseas, just on average. Just on average, about 11% that they had to make up for when you started taking a look at the different currencies, whether it be the euro or the pound.
Yes.
You know, that was pretty significant to have to make up top line.
Oh,
dollars, you know.
Oh, yeah.
And it's just going to continue to maintain that same level or get a little bit worse, which is why this morning during the show I said, you know, what I think we can expect is we can expect to see a number of buyouts taking place because in order to make the top, because many of them are flush with cash.
Right.
And they've got to, you know, they're going to start feeling the pressure. Well, they already feel the pressure.
Right.
To make their top line numbers. And the way that they make that top line growth is through acquisitions.
Yeah,
because it gets, you know, it
gets muddled.
I mean, you can go back and do the calculations, but the street eventually forgets about it because the memories are so short.
Yeah, no doubt. It's pretty wild. Yeah. It really is. The bottom line when I'm looking at this dollar, it's like show me something else where someone wants to put their bread. You know. It's like, okay, where are you going to go? I mean, and it's that cut and dry. So it's like, okay, if you're going to do business, there it is. And what does happen is this. Now, this is where this gets really interesting. Is that picture, there's hundreds of millions of people that are not in the market.
Yeah.
Right?
Yeah.
Well, they're going to be richer. Just by having their dollars.
Understood,
so economy-wise, okay? Economy-wise, bottom line. And then the real kicker, you know, we're talking whether it's gold, you're putting your money into gold. Well, what you are going to have is this is what's really bizarre, is that with the dollar going up, with the euro going down, you will have gold in euros at all-time highs.
Right.
I know.
Which is good, just simply to understand just that demand element.
Exactly. You
know, that fundamental.
Exactly. And what is going to happen, folks, see, what was supposed to happen is this, is that this year the supply over the demand in the gold market will still be bigger. There's a bigger supply than there is demand, right? What they were figuring is even next year it would be bigger, but I suspect what you're going to see is this, is that the demand will be larger than the supply. And the main reason is that a lot of these countries are trying to take over these mines. And once the country takes over the mine, right, well, if it was going to do 100 ounces, it will do 10.
Yeah.
You know, just give it a year. They won't get out what they think they're going to get out, and that is going to change the dynamic inside the market again.
Yes.
You know? And these countries are getting aggressive, man. They're definitely getting aggressive. So we're going to make sure that good old Congress doesn't get aggressive in Nevada, because it is. Well, no, it's amazing. It's amazing. They, you know, as soon as you see something in the dirt, it's like, hey, give me that, man. Let's tax that.
Yes.
Tax everything. Let's go over to K Rico. Hey, K Rico, what's going on, brother?
Hey guys, good morning.
Good morning.
I want to do a little housekeeping again with you, okay?
Housekeeping? We got a clean house.
Well, I'm sure there's some dust.
Oh, yeah? My wife won't let me have dust in my house.
I love it.
The first thing I got to do every morning is do all the windows and do the floors. I'm not kidding either, folks. I'm absolutely not kidding. Thank God my mother used to make me do that, so I'm used to it. You know, it's so funny. Go ahead, K. Rico. Sorry, man. Oh, I'm totally serious too. And I always said to Angie, I says, you know, thank God I used to have to do chores every single day, so it's no big deal for me. Do you know what I mean?
I love it.
But it's hilarious, man.
Well, I hope your house isn't too gigantic, so you're not.
Oh, listen, I have. You talk about tools. It was really funny. I came home one day, right? First, what happened was this: is that I love wood. Okay, so when we were going back and forth, she wanted to put tile in. And I says, no. I need teak floors, right? And she says, if you put teak floors in, you got to clean them. I said, no problem. You know what I mean? But then I knew. I said, so what happens, folks, is that there's plenty of tools that you get at those flea markets. You know what I mean?
Yeah,
they clean floors in 2 seconds, man, with, just all these, long things. So I got that. So
Get the robot.
Exactly.
Get the robot.
Get the robot thing.
Oh, the robot thing. That'd be cool.
That's right.
And then, of course, with the windows, if I ever need a new job, I can be a window washer because I got all those, those things. I have fun with those. The squeakies.
Oh boy.
What are we going to look at? So what are we going to clean?
Remind me not to get married.
Hey, you only have to know those 6 words. You're right, honey. You're absolutely right. Then you're all set.
Yeah, well, I got the other 6 words. Get out, get out, get out.
Oh, that's so funny.
My housekeeping today is, last week, if you remember, and I'll refresh you, I said that the United States is having earthquakes in the middle of the country now, and I was vindicated maybe 6 hours after that when the major drillers that are involved in the middle of our country's activities for this drilling, they're doing deep underground fracking. The insurance companies, every insurance company that is involved in underground insuring work, refused every one of those companies. This happened 6 hours after I spoke to you guys about the fracking is going to cause, in less than 50 years, an earth volcanic active situation in the middle of our country at the rate they're going. So I asked myself, really, I did ask my friend, we talked about it, but I really went through it. Why aren't these people going to be able to get insurance from these big companies? And the answer is simple, because the big insurance companies realize what is happening underground with Mother Nature. They're not fools. They have research people doing all the analysis themselves. So anyway, that's my homework, my housekeeping, and my feeling. It's still strong. And then to top that off, just yesterday, we had a major 3-point earthquake in Oklahoma that registered at a depth that was 5 miles deep and 3 miles deep, which is very, very close to the upper surface, which is very dangerous. Because if they say they're drilling deep, 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 then the earthquake should have happened very deep. So we'll see what happens.
My understanding is it's horizontal, right? I mean, they go down and horizontal. Horizontal. I remember when it first started, up in Alaska, in the oil fields. I mean, it's horizontal, and then what the fracking puts water into it, and they try to push the pressure out, right? I mean, that's what we're talking about.
Yeah. But the biggest fear, here's the further research that I did to dig into why the insurance companies wouldn't insure these companies. It's because the water that they're using in this fracking combination is going to eventually poison the aquifers that the whole continent that we are under. The poison will ruin all the wells across our world in our country, and I think that's pushing a little. That
I agree that, listen, man, I wouldn't want them doing it in my backyard, and going to out there if I know that they're pushing something down there and a couple miles away from it. There's no doubt about that. I think some of the people that are leasing their land out knew that, and other people didn't. Okay, you know what I mean? And that's that. Hey, listen, man, that's their choice. It's their land.
Well, it's their land, and it's their greedy behavior. And I'm speaking in a 50-year process. We gradually will be causing major underground the word is difficult for me to pronounce. Aquifers. Slowly being in jeopardy. That's my point.
I see. And is it all connected? That's something I don't know. I mean, are you saying that all the water that's underneath, like say the United States, is all connected?
Picture our body. Our bodies are all interconnected with veins, arteries, blood vessels, and such. What it all boils down to is the heart is the organ that does all the pumping. I am not a seismologist or a geologist. I can't answer your question. I'd have to surmise, though, that when one thing starts to crack, break, and get, poisoned and affected, then the blood pressure in our body affects someplace else in our body. So let's equate that with the earth being in the same possible scenario.
Okay, I understand what you're saying.
Yeah,
but
hey, I got one more thing.
I'm not in the camp that they're going to poison the whole earth. I can tell you that right now.
No, I'm saying in that general area.
Well, yeah. Listen, who knows? I don't know.
Yeah, a little lighter-hearted thought. Do you know what creature in the planet has 3 hearts to maintain its normal daily behavior? This is not a trick question or a joke. This is a real cool question. That's a great party question at a party.
Okay. What is it?
We're trying to make some money here trading the small caps. Go ahead.
The
octopus. It's the octopus.
Yes.
Ah, thanks. See that. Bottom line, folks, the Tigers Den knows all. Have a great one, man. Have a safe one.
Okay, gracias.
All right, thanks. So the DAX, during that time period, the DAX was able to get up and over the swing point from July 20th. Let me make sure that's right. 67.75. Yeah. So that is a swing point high. So we should get some release of information here at 11:30 this morning.
Sweet. And the small caps have been selling off.
They know it. They're watching the DAX.
Totally. We take a look at some of the large caps. You had, let's see, IBM is up 96 cents. You get Boeing flat. You get Caterpillar up 36. You get Disney up 55. Oxy's up 54. Let's go over to RIM. I want to see what RIM's doing. RIM, of course, has been just downtown in an extraordinary way. It's not done yet. Oh, my God. This is sick. So put this on a 15-year monthly. Yeah, see, so on the 15-year monthly, it's 748. Oh, it's going to get interesting. So 710. So watch this, folks. This is pretty wild. So 710 is the original breakout on RIM.
2003.
2003.
9 years later.
Right. So the volume there was 800 million, and we did 437 million in June, and we're going to do about 450. It's not done yet. It's gonna go after that 410. What a trip, man! So it hit 750, 656. It already did it. That's going to be interesting. So you'd still want a sign of strength. That's the bottom line.
Yeah. Before you would try to step into that.
Yeah, and that's what someone just came up with something good in the den. What does happen, K. Rico? We need. You got to give us some links so we can take a look at that information.
Yeah.
You know what I'm saying?
That'd be great.
Well, that's where it's coming from. There's no doubt. There's a lot of controversy about it. There's no two ways about it. I mean, there's been farmers flat out that it's gone down there, and man, if you throw a match anywhere, that thing will go up.
Yeah.
Now, a couple articles that I read about that was at the beginning of fracking. Now they're claiming they got it down. It's controversial, that's for sure.
Yeah.
I think it really has to do with the people selling their property or leasing their property. They got to know that if you want to live there, I wouldn't want to live there. If you've ever been around any oil fields, folks, the bottom line is that, you don't live in an oil field. But let me tell you something, we need them. There's no doubt about that. Steve Rhodes, Tom O'Brien, appreciate you growling and prowling out here with us. You stay right there, folks. You get the Dow at 29. NASDAQ can't hold price down a couple bucks. S&Ps are flat. We're going to bring it back.
Okay, so they're working on the Apple today.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll you'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Time is the great equalizer of all mankind. Time doesn't care about winners or losers, who succeeds or fails. Time only cares that you played the game. Question: are you playing the money game? Is your money working as hard for you as you are for it? I'm Steve Rhodes, author of Mastering Probability, a daily trading and investment newsletter service, and we're celebrating our 1-year anniversary. In year 1, we generated a 30% profit. Plus, I provided 26 hours of live coaching to my clients. My daily newsletter service is available by 8 a.m. each day and covers the stock, futures, currency, and commodity markets, along with all the current patterns that you can trade. Each newsletter is packed with education, and it's yours for as little as $3 per day. And for the next 30 days, you can try it risk-free. Click on my name, Steve Rhodes, on the homepage of TFNN.com and begin your journey to great wealth today. If you're waiting for a better tomorrow, remember this: today's tomorrow will soon be yesterday, and your clock is ticking. Mastering Probability. Now is your time.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Steve Rhodes, Tom O'Brien. Appreciate you growling and prowling out here with us. We have the Dow up 34, Nasdaq's down 2, S&P's are flat out here, and the Russell once again is the weakest indice. So got
the month coming to an end tomorrow,
right?
And Walmart is one of those stocks that we want to really pay attention to.
That's right.
Right. I mean, this thing is breaking out all-time highs going back how many years?
1999.
That is just one heck of a consolidation.
If you put it on the 15-year, bottom line, you get a close over 70.25, and it's going to do it.
It's going to do it.
That bottom line says that that's a monster ABC up. I mean, it already has the volume. It was 135 million, 195. So it already has the.
Yeah, it's got conviction for sure.
And you got $11.
Big time.
So it's a 50, 60, 49 A to B.
And really, you can just use the high, the high of the
80,
range
50,
from December of '99
so it's 91,
down to the low.
$91.
Yeah. Not bad. And it plays a nice dividend, I think.
Yeah, and the sad part is that what that's going to be all about, though, is that they paid off all the representatives and the congressmen and the senators.
Okay, as far as the tax, sales tax.
That we're going to pay sales tax.
Yeah.
On
Amazon.
Everything.
Right. But that's kind of one of their primary focuses is.
Oh yeah.
Amazon.
Oh yeah, no, it is. It is. But what happens? What you don't hear, and this is the real problem, Amazon folks can pay the taxes and they'll be fine. What does happen, though, is that the smaller companies that are out there, okay, that are doing business, right, they're the ones that are going to get killed. Because what happens is that for those tax jurisdictions in every different place in the country.
Yeah, just simply to be able to maintain the sales tax aspects of where you're selling.
It would kill you. It would kill us.
It's an administrative nightmare.
Yeah, exactly. Bookkeeping nightmare. And that's the thing that, and of course Walmart loves that too. So, are you going to go to Walmart or not? I tell you.
Yeah.
It's funny. I go to Walmart for basically fishing supplies and a couple other things, but
I get my oil there.
Yeah.
It's so much cheaper.
I'm just like, I know.
Hey, this is beautiful.
It's
much cheaper than AutoZone and everybody else. One of the guys in the den turned me onto that.
Really?
And it was amazingly, substantial percentage.
And oil's so expensive, it's insane.
Yeah, you're paying like $9 a quart. So.
Right. $9 a quart.
Yeah.
Oh my God. Unbelievable. Listen, folks, you stay right there because, of course, and don't forget, Steve kicks us off every morning, 9 a.m. Eastern Time. We go from 9 to 6. You can get all that programming right on your cell phone at tfnn.mobi. So it's tfnn.mobi. And, of course, as soon as you hook over to us, you can get Tiger TV. There's, you can really get hooked in. But if you are in the car right now going out to work, always remember that, tfnn.mobi. We're going to be going from Florida up to Newton, Massachusetts. Basil Chapman's going to be growling proud with you 11 to 12 Eastern Time. Then Tucson, Arizona, Larry Pesavento 12 to 1. Dallas, Texas 1 to 2. Daryl Martin, the Diagnostic Hour back here with David White 2 to 3. Then beautiful Southern California with Ken Shreve 3 to 4, and back here 4 to 6. Time's flying, isn't it?
Oh yes. It's already July 30th.
I know, man.
July 30th.
July 30th. That is crazy. That is absolutely crazy.
Yeah, I think in Florida the kids start college here soon.
They do. Oh,
next week or next couple weeks.
And the high schools, Kyle goes back, I think the 15th of August, because they get out a little bit earlier up here, folks. So they go back before Labor Day. Steve Rhodes, Tom O'Brien, appreciate you growling a problem with us. Right now you get the Dow up 17. The other indices can't hold price.
Take care, folks. Have a great day.